Welcome, everybody, to the Misfit Happy Hour. I am Sang Lucci, and we are joined today by my boy Spencer, our resident crypto expert. Say what's up. Say what's up, Spence.
What's up? What's up? What's up, everybody?
Chris Cady will not be joining us today. It's just going to be the two of us, and we're going to talk about some pretty interesting crypto events that have happened recently. Um, can you guys see my screen? Let's make sure we get the chat up. I kind of didn't want to show this until later, but it is what it is. It's already up.
All right.
Spence, you can see my screen?
Yeah, I got chat and screen up, so yeah.
Okay. You know how Zoom like covers up all this shit, so you can't see anything. So I want to get the chat application up. I don't know where the hell it is.
We got CNBC in the background. Let me go turn that off real quick.
Okay. Guys, sound off if you can hear us and you can see the screen while I look for some other thing. Here it is. Now I got it. Okay, here's the chat. Boom. Alrighty.
All right.
All right. Let's wait for a few more folks to pile in here. But what'd you think of the Fed minutes today, bro?
Yeah, I mean, it was crazy, man. So a lot of this stuff started last Thursday. I think 75 was a good step, right? And the market was bid on that, so that was good. I mean, tech tape was good, right? Which
Yeah.
was exactly what kind of the positive sign. Let's see what tomorrow brings, though, more or less.
Yeah. Yeah. All right. Let's get into this. I mean, I think we were going to highlight a couple big events in the crypto space and have Spencer kind of explain them to you. How many of you guys were obviously heard about the Luna issue, and how many of you guys are starting to hear about Celsius now? Spencer's going to explain what these two platforms are. But if you guys can see the screen and you haven't heard of Luna, this is what it looks like. Yo, I really was trying to short this thing like 40, 50 bucks. Like I was trying to short this thing, and this second leg here just broke
Yeah,
me in half, bro. Shit broke me in half. I
yeah,
caught some good shorts at like 80, and I
yeah,
caught some of it on the way down and everything, but it happened so fast, man. It
yeah.
happened so fast, man.
I had last covers at 18, and I just watched it fall to zero. Felt
Yeah.
like an idiot, but it
All
is.
right. So let's give them a precursor. What is Luna? What was Luna, I should say? Well, now there's a Luna 2.0 and they
Yeah,
rebranded it, but we can talk about all that stuff. But just to give a precursor to everybody who doesn't have a clue what Luna was and is, what is this shit, man?
yeah. So Luna is it's like a super important part or a piece of Terraform, right? So Terra blockchain is a blockchain in particular. And so they have a bunch of different kind of application or dApps that are built out on Terra. But basically, this is the whole thing. And I think it was the last Misfit happy hour that we were talking about the blow up, right? And a lot of this was a cause of just massive CDP positioning that was on their books, right? So CDP is just collateralized debt positioning, which means it's just credit, right? It's Fugazi money. It's you're taking loans against this, you're borrowing here, you're sending here. What that does to the space is even if it's over collateralized, if you can't make your payment to your borrower, they're coming after you or they're taking massive losses, right? And that's kind of where this big chain of events started a month ago, right? Was all because of Luna, right? So the Luna blowup was 60 billion
Right.
at that particular point in time, and that was just a spot market. So all of a sudden, in a matter of like 3 or 4 days, 60 billion is wiped off the books, right? Who's got that 60 billion? Where is that money being invested? Where is all of this value that just evaporated, right? So what that created for the total crypto ecosystem was a massive systemic risk, right? And you and I were having conversations here in the office that were saying, listen, let's not forget about this. Even if we bounce,
Yeah.
right? Because I think we traded 25 Bitcoin at the lows on this Luna,
Hmm.
And our conversations were, let's not forget about this because there's contagion here, and this is not the last time we're going to hear about this.
Right.
So,
Okay. Okay. So kind of can we also kind of give them an idea of how it all happened? You know what I mean? We're talking about a stable coin that this is attached to.
yep,
How does this risk kind of unfold itself?
sure.
And hold on one second. Yo, Carlo, move to the conference room. How does this whole thing like start? You know what I mean? Like how did it all start to unravel? Just like that 2008 shit and like how does this happen? You know what I mean?
Yeah,
This to me was like I've never seen. We've always been talking about a project like this going to zero like this and this sort of systemic risk, to blow something up, but we've never actually seen one
yep,
happen in real time. Like I was a whole, we were, I'm a short side trader, so it's like I'm waiting
yep.
for one of these things to just fail miserably.
Yeah. One, I didn't want this to fail, right? Because I know what that means to the industry. Um, and we're seeing kind of the ramifications slowly trickle down the line. And by trickle down the line, I mean all the way up to collateral damage, right? And so how does something like this fail, right? Where did it start? It started with around roughly 76% of the total UST being held on Anchor, right? What happened was UST is a stable coin, right? At that particular point in time, it was an algorithmic stable coin. It's still an algorithmic stable coin. It's just not stable, right? So everybody believed, and there was roughly $18 billion in UST, that it was pegged to one. And for the longest time, the algo worked, right? It was pegged to one. So there was trust. There was instilled trust through depegging and repegging events, right? This time it didn't repeg, right? And
Right.
so what happened was that $18 billion of value went from $1 on the dollar to, I don't even know what it's trading right now, right? It's trading,
0.007, and
that's
this is in.
$18 billion right there. That's what that chart represents to me, right?
Right.
And so in the game of follow the money, who's holding onto that money, right? Okay, hedge funds are holding on to UST. Okay, institutes are holding on to UST. Okay, retail's holding on to UST, right?
Right.
Everybody across the board, unless they're short UST, is going to take massive losses,
Right.
right? And if they have loans on that, which they
Right.
did because there was an option for doing this in
Right.
Anchor, they're going to take massive losses, right? If you're
Right.
borrowing to essentially paper, there's nothing coming back to you on the lending side.
Right. So this was the protocol that everybody kind of was on and using to stake or to lend their UST, so that they could earn, a pretty fat rate. I mean, this was up to like 20%, I think, at one point. And basically you could loop it. I don't know how many times, but that was something that I also read about as well,
Yeah,
that when you purchase or when you get into this thing, they send you the CDP and you use the CDP to continue to loop it and now get yourself like 100% or get yourself whatever.
yeah,
Um,
yep,
so remember, we're a trading desk. We have a space here, and there's several traders that were involved, in this thing and went to absolute zero on this thing. So, it's affected a lot of people inside our own community, and obviously
yeah.
we've been watching with the news and everything, and seeing how aggressively it affected South Korea, because well, like what was the attack, what was the thing, which I mean, was this all started in South Korea? Was this a South Korean based project?
So the connection there is they have this application called Chai, right? And Chai is a payment processor, I believe, in South Korea.
Okay.
And there's just massive amounts of payments there on the application. But on the back end, which was super interesting, and I think a totally genius idea, was they were backing it with blockchain technology. Why do I say it's a genius idea? It's because if you go on the street and try to explain crypto to people, they're going to look at you like you are the craziest person alive. right?
Sure.
But if you give them a nice front end and you power it with blockchain, you're bringing in the tech side, which has massive amounts of value, and you're also providing a usable front end to the consumer, right?
Right.
And so the problem is UST was an option on this app,
Okay.
if I'm remembering correctly, right? And so there was massive dependence on some of these stable coins, algorithmic stable coins still lasting, right?
Okay. Okay. So there was a big fallout
Right.
on that side as well. What's now happening as a result, right? So Luna blows up, right? This
Yep.
money just evaporates.
Yep.
There's loans that that there's redemptions all over the place, and then there's this sort of trickle down effect where these losses trickle into other things.
Right.
What's going on with like the oversight of this shit? Like that was a huge, like a massive blow up, one of the biggest we've seen in crypto thus
Yeah.
far.
Yeah.
And how come like people, I know SEC's investigating or whatever, but where the fuck they even launched a Luna 2.0. This guy was like, we're gonna launch another coin to try to get you some of the losses back. And then that coin fucking got shithoused too, bro.
Yeah. So regulation and oversight is lagging, right? I mean, that's how it always happens. You need a blow up and then it's investigations, right? So it is hard to tell in terms of what kind of regulation is coming into the space. I think it would be ignorant to believe that it's not coming, and it probably is going to come in pretty heavy after something like this. And then in terms of what's happening now, this was the first domino to fall. This
Right,
was the first CDP to blow up, right? And this stress tested the whole system.
right,
And we're starting to finally see the next dominoes falling, right?
right,
And what you're starting to hear through the grapevine is this was the first major loss. The second one can't be held, right?
right,
That particular point in time, there's just lost trust. There's all these kind of things, institutional level, all these things to where there's forced sellers across the board. And that's
right.
what, since last Thursday, has been happening in this space.
Okay. Okay. Um, let's move to the second sort of project that has this sort of same or similar risk involved with it and might slowly unravel, or at least that's what the news is purporting.
Yeah.
Um, Celsius. So what is Celsius and and why is everybody talking about this thing?
Celsius is similar to the equivalent of a bank in the crypto space, right? So you can deposit, you can deposit into their earn section in their accounts. They'll get you a high yield, right? So it's equivalent to a high yielding bank account. The problem is how they're handling their assets on their book, right? Um, so before we dive completely into Celsius, we have to
Okay.
understand another CDP,
Okay.
which is ST right? So it's staked ETH in the Lido pool, right?
Okay.
And so what happened, it started to kind of get rumored around Tuesday of last year or last week and Wednesday of last week that there was some depegging happening, right? And so what does that actually mean? The problem with CDPs is everybody's belief at the current price, right? They're not modeling around what's considered to be volatility in the space, right? So this CDP in particular is actually backed one-to-one with ETH, right? So this is through the Lido pool. And through that, you can deposit in one ETH to help bring support ETH 2.0, right? And they'll credit you with this CDP. With this CDP, you can go do whatever you'd like to do with it, right? At particular points in time, it's a tradable market. You can see what the price was. Now, this CDP is not redeemable for your ETH until ETH 2.0 launches, right?
Mhm.
At that particular, so there's a time premium here. There's a lock on liquidity, right? And so if the CDP trades under par of what it should trade, and it's able to trade because it is a market, people are thinking that it should be worth one ETH, but it doesn't have to be worth one ETH, right?
Mhm.
And so when this stuff starts to depeg, there's a lot of assumptions that are actually not correct, right? And so if people are dependent and pulling loans that are probably not secured in a good way, 2%, 3%, you might not be able to stomach some of those, right? And you might go insolvent at particular points in time. The event with Celsius started here, right? And what happened was, I think Wednesday or Tuesday of last week, Almeida started unwinding their ST ETH position, right? And what they did was, through that, they cornered liquidity in the markets, right? There's a couple different LPs in which you can trade ST ETH in. You can trade it in Curve,
Hmm.
and then I believe you can trade it through this platform called Euler, right?
Okay.
Definitely, if you're not in crypto, you should check out those, at least see what's going on, right? And because this is some of the craziest things I've ever seen in markets. But Celsius had a or has a big position of ST ETH, right? So they're buyers of ST ETH. Now, what they're doing with that is up to them, right? And the problem is, when this stuff starts to depeg, is there liquidity for the size that they have on their books, right? And the answer is no. So they were in a liquidity crunch, right? And um, there's in the description of this video, I'll drop in some interesting threads and interesting just kind of things that I've been reading over the last week. And it's, to be quite frank, I'm not completely caught up on every single piece of this story, right? But what started to circulate was the impact of the market, right? So at particular points in time, there were going to be forced sellers in ETH markets, right? And if you were on the tape over the last few days, the CPI number was the fuel to this fire,
Mm.
right? We come in way over expected. Everybody's going to sell assets anyway, because that's horrible, right? We're expecting somewhere in the fives and we print a 40-year high, right? So market's going to be weak, right? And oftentimes when these things get stress tested, further declines in price put stress all across the board. And then there's just fires that are just starting everywhere, right? And so there's liquidity issues in the markets. There's CDPs that are blowing up and depegging. There's loans that people are unable to repay. And then there's hedge funds being now rumored to go insolvent, right? Hedge funds going insolvent only matters if they're big. The one that's rumored to be insolvent is 3AC. 3AC is Three Arrows Capital. At one particular point in time, they had 9 billion under management, right? This
And
starts to trickle everywhere, right?
okay.
And so also with investors, you start selling crypto and all these kind of things. So that's kind of what's been happening.
Okay, okay. So let's talk the future of some of this stuff. I mean, number one, you had sent me this you had sent me this gauge. So this tells us the current peg basically between staked ETH and Ether. At what point does this get to where it's kind of like all hell breaks loose kind of thing?
Yeah, so I don't know the exact numbers on this one. You can run through some of the Twitter threads. Some people are talking 80 on the dollar. Some people are
Yeah.
talking a little other. It's been a decent amount of time now to where people are pulling credit lines. People are backing their businesses, right?
Hmm.
Because this is the obvious risk that's in the market. Um, Something that's very interesting is I actually don't think this poses terrible risk to the overall market, right? The market has to price in the time premium on when they would be willing to buy ETH in the future, right? So I actually think that STETH shouldn't be 1-to-1. Like, it
Hmm.
should not be priced at a dollar, because you should factor in a couple different risk factors. One is smart contract risk, right? If I'm going to come in here and deposit, who's to say Lido's not going to get hacked, right? So the insurance of that costs 2.6%. So this, in theory, should already be 97.4 on the
Discount,
dollar, right?
discount a little bit. Yeah.
That should be priced in the market. So that's fine. The next piece is Ethereum. How much do you, or how capable do you think Ethereum is of launching ETH 2.0? I think that, I mean, the beacon, or not the beacon change, the Robson test network did it amazing, right? So I think there's actually a really good possibility that they're going to do it. And that's super exciting, right? So if that's the case, where's that time premium factored in? Are we thinking 4 weeks? 4 weeks, I'll buy 6% under the dollar. Absolutely. right? If
Right.
I can get that back. Are we talking a year? A year, I'm not looking for 6%. I'm looking for a little heavier, right? So where do these actual buyers step into the market and make that spread?
What you talk about Ether 2.0. When is that happening? And then what is it? Are they switching to proof of whatever the hell, or are they is it going to speed up transactions? What is the big change that everybody's waiting for, or for Ether 2.0? What is that?
Yep. So ETH currently is proof of work, right? So the
Right.
only way to keep the system going is through proof of work. It is migrating over to proof of stake,
Okay,
right?
so it is
And
going to
that's
proof
the
of stake.
big migration that everybody's kind of talking about. I'm not huge into the tech side of things, but I'm interested in terms of how the market's going to react based on those events, right? So I've done some reading and talking to devs and talking to people that are actively in the space, right? Um, so yeah, that's the next step for Ethereum, and people think that's the great next step in the core team, and that's where the community is driving towards.
Okay. Okay. So, predictions here for the summer. I mean, are we going to see, more sort of systemic risk in the crypto space in the sense that more liquidations, people forced out of positions because they're over levered kind of thing, or, do people have enough liquidity sort of, the big groups out there, the big funds out there? Is there enough liquidity to go around to stomach further further lower prices? In which case, do we start just seeing nothing here for the summer and then eventually just a trickle back up? What are we looking at here? What is the downside risk, I guess, from here on out?
The downside risk, I'm not even going to pick a price because it's
Yeah,
unknown,
picking
you
a
know.
price is whatever, I mean, I look at the equities markets and it's like if equities markets are going to continue lower, I can't see a world where crypto doesn't also follow along. But, what are we looking at here?
So previously I wasn't terribly bullish on price action. As action has continued to sell, I'm actually getting a lot more bullish, right? And the
Right,
reason for that is
right.
the more liquidations happen, the more we stress test. Something that's super interesting is DeFi is holding up. A lot of these malicious actors
Hmm.
are centralized institutions, right? So Celsius being essentially a bank, Three Arrows Capital just mismanaging some of their risk, and honestly, they've done incredibly well over the last few years. So hopefully that rumor is not true. But as people continue to take losses, I'm extremely excited about the future of this space, right? So if you get into some of these discords, if you talk to some of these teams, they're not concerned about price, right? At
Right.
particular points, yes, it's not great look on the space, but these people are actively building. And most of the conversations I've had, everybody's excited to get back to work, right?
Mm.
It's been a decent period of just up, 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 up.
Yeah.
And now everybody's back in building, right? So
Right.
I think in terms of time frame, it's gonna be pretty similar to risk on assets and equities, right?
Right.
Growth stocks, tech stocks. That seems to be how we're trading.
Yep.
Um, but I think these are great things that have happened to the space from the respect that we're learning from them,
Right.
right?
Well,
Systems are getting tested and they haven't failed.
yeah, the system in itself, but it also does show how human we are, right? I mean, we
Yeah,
took we took a new system, we over levered the fuck out of it, right? And now, that part of the history has always repeated
yeah,
itself, right? I mean, regardless of how good the tech is, we'll
yeah,
still misuse it, right? The bad actors will still misuse it.
yeah.
Would
So
you would you consider, the sort of over leveraging of the DeFi system in terms of, the one thing that I never understood was that if DeFi protocols are over collateralized sort of loan situations where you're only getting 75% of whatever you put in, how the hell are you over levered on something? They don't even allow you to do that. So you know, how was it that these people got so deep into this stuff that that we're still continuing to see these things happen?
yeah, um, CDP in particular, this is a great question. So I was talking to a couple of people last week and I said, as an industry, are we feeling confident about CDPs? And CDOs are the big thing that everybody realized blew up in 2008, right? While this is over collateralized, it seems to have some of the similar impacts in terms of leverage to the market. And it's so easy when people lose money to say, that's illegal. We can't do
Right.
that.
Sure.
And I think something that's super interesting about this space is it's not trying to be traditional finance, right?
Right.
Some of the solve or problems that it's actually solving are problems that exist in current systems, right? So while I do think that CDPs need to be talked about, I'm not anti-CDP, right? I'm saying, okay, maybe it didn't work at this level, right?
Right.
Maybe we should think about something different or come up with some creative ideas on how to use these things. I by no means say that we stop everything,
Right.
right? Um, if we come in and overcorrect in terms of regulation, in terms of all this stuff, you're totally taking away the attraction that this market has in terms of ability to create, right? And push boundaries
Yeah.
that is kind of the purpose of this market.
You know what? I'll say, to your point there, I have seen so many more like regular people, especially folks that come into this office that are just talking to us about markets. They've all become these sort of low-level economists because
Yeah,
of crypto, because of reading some of the white papers and needing to understand deflationary and inflationary mechanics, and then understanding having what is it called, like having a inventory, or not inventory per se, but you have like a fund or something, like a pooled fund where different things are happening, and like people are slowly understanding economics just from
yeah,
a Federal Reserve perspective, and because they've read so much of this shit, and it's become so common knowledge now. Well, I shouldn't say common, but it's been so put out there that people can come up with their own coins, man. People can come up with their own coins and determine for themselves how they want to manage the economics of that coin. What are they going to do with the supply? Where are the
right.
reserves coming from? You know, what are we going to do if X, Y, and Z happens to the price of the token, or if it goes down, or blah blah blah. And they're all, people are kind of understanding this stuff, which is that's never happened in the history that I've been in finance here. I mean, when you talk about how the Federal Reserve manages the U.S. dollar, nobody has
Yep.
a fucking clue what the hell is going on. I would venture to say nobody still has a fucking clue. But now, because so many tokens are just readily available, and the tokenomics are just out there ready to read, it's became sort of public knowledge here how to manage a money supply, and how to have your own sort of coin, and have
Yeah.
and make your own kind of currency. And people are understanding the micro and macroeconomics behind how a currency moves and how it needs to be managed, which has been, what we've seen for decades but haven't understood.
Yeah, this space, I think, I mean, equity space and traditional finance is moving fast. This space is forced to move 10 times faster,
Sure.
right? And so some of the things like in terms of learning curve, just being in the space, if you're seeing a Luna blow up, if you're seeing some of these institutions blow up, you, you're living through it. You have to experience those things. And that happens in 2018, that
Sure.
happens in 2022, it's happened, and these things happen through the cycles of this market because it is relatively new. The last time it happened in traditional finance was in 2008, right? And people don't often remember that. I don't remember that. I remember what Detroit looked like in 2008. I remember what happened to my city from being connected to Detroit, right? It was just global, or there was just chaos.
So then the question is how far does it go, right? I mean, obviously the amount of money that was recently, lost or whatever, like how connected is it? I mean, 2008 was a situation where a whole city was about to go down, and whole industries were about to go down, and tons of employees are about to get, just thrown out. and the effect of all of it took years for us to work through.
Yeah.
So the comparison to 2008 for some of this stuff, to be honest, it doesn't make sense to me. It's more comparable to like an internet kind of tech boom sort of situation where it was just like money goes up and then that money just sort of dries up. But how deep, I guess, is the bloodbath going to continue because it's connected to a Luna or to whatever else this stuff is, a Celsius or things like that. I can't see it go as far as like a 2008 situation, but what level has to happen, because again, we continue talking about, is this whole thing a Ponzi? Are all of these DeFi projects that give out a ridiculous APY? We've seen rug pulls on every single one of them. We've seen we've seen the interest rates or the APYs that they've offered go down to zero. We've seen the tokens go down to zero. You know what I mean? How much of this has to happen for people to get to a place where they're like, all right, that's it. Just throwing the motherfucking towel on this, and then you get the reverberations across everything else. I mean, to look at it from a real estate perspective, there was a couple deals that got dropped in this building that I'm in, and these were crypto guys that were going to buy in cash or buy in crypto, and they pulled out of the deal because of the tank in crypto. So there's definitely reverberations here. It's not that thick, of course, but at what point do we get to that place?
You know what I did today?
Mm,
Today, and I've been extremely like seeing kind of all these happen, like the fears started to build up, right? And I sat there in the seat today and I said, you know what, like we're going into the FOMC. I have my own prediction on what's going to happen. But as I continue to talk with people, as I continue to look through Twitter, the fear started to build up.
right.
And
Fear's out there right now. It's
the
palpable.
yeah, the fear started to build up. I started to notice people were very afraid. So what I did was I bought, right? And the reason for that is thinking about this and thinking about 2008. I don't even think we can compare this to 2008, right? We're talking, you and I were having conversations and I was asking you what was the general sentiment in 2008? I
Sure.
was extremely young at that particular point and I was more worried about probably middle school or elementary, right? And um, you said it was way worse.
Way worse.
And we're talking about a small sector of the global economy, right? $2 trillion is relatively small. Um, and so while it does feel fearful, it's usually when the best opportunities are to buy,
Mm,
right? And so do I know how far and how much contagion spreads? No,
right.
right? But I do know the emotion and the sentiment of the market, right?
Mm,
And I do know the percentages that we are down. And if it stops spreading, there's a symmetrical return to the upside, as there always is if you buy
right.
into fear.
Yes.
And so I'm looking at the space like that. And so I've had a lot of people reach out to me over the last 3 or 4 days, texting me, calling me, DMing me. What do you think about this? What's going on with this and that? The answer is I have my own thoughts. You have your own thoughts,
Sure.
but we need to think about this objectively, right? If we're traders, where's the risk reward? At some points, if you're buying 90% down on the dollar, your risk is 10%. Your risk is zero, essentially,
Right.
but your return is 5x, 10x,
Yep.
20x,
Yep.
right? And
Yep.
in the game of investing, in the game of trading, you're looking for those small risks and huge rewards, right? And that's where my interest has come as price has declined, right? And
Gotcha.
so I'm not afraid. You know,
Okay.
I like this. I like kind of all of the leverage getting washed out. It's normal, it's natural, it always happens,
Yeah.
but that's the next step. So
Okay. All right. Let's take some questions here. Has Spencer had a chance to read about the Tron? There was a Tron depegging as well. So there's rumors here of the stable coin behind Tron also depegging too. So there's a good amount of those rumors going around, and then there's one other protocol I think that's having the same rumor spread around there too. So what do you think on Tron? I don't know if you looked into it.
Yeah, so a couple things. One is, Brandon, you should look into USDN as well. Look into Waves.
USDN. Oh,
Um,
Waves, right.
it's
Waves
another
was the other one.
algorithmic stablecoin.
Yep.
USDD is, I mean, it's similar. It's similar to Luna, man. So
Right.
algorithmic stablecoins, I don't want to say they don't work, right?
Right.
Because I don't know if they work. They haven't worked up until this particular point in time.
Sure.
And for that reason, USDD, yeah, I was reading into it. I was actually looking when they were launching it. There was competitors in the space, right? So there was Near Protocol that was launching to compete with Luna. Luna blew up, and Tron then was launching to compete with both Luna and USD or UST. And then Waves has their own stablecoin, right?
Right.
So all of
Okay.
those do pose risks when they blow up, right? Because who's holding on to the paper at the end of the day?
Absolutely. Okay. All right. Any other questions, guys, before we wrap this up? As for positioning for myself, I'm basically just writing options on both sides of the tape right now with Bitcoin in particular. I love shorting pops on, a lot of names. This Waves popped up recently to like $8 or $9. I think it was just like, I don't know, last week, man. I think that was literally like last week this happened, and it popped up to 11. It was just kind of hanging around up there. That was when BTC was still at, 28, 29, just kind of in that range. And then this waves just started coming off before Bitcoin came off. So if you see any of this stuff, Chainlink also went to $9 randomly, and then just failed all the way back to 5.5 and stuff like that. So some of the pops that you'll get, the random ones, while Bitcoin is doing nothing, those are shortable. Those are shortable for me. I pulled a couple on the GMT token as well. So that's kind of what I've been doing thus far. I'd love to see another breakdown in Bitcoin or Ether. Who knows? Who knows? But for now, while we're in this range, writing options on BTC has been working out pretty well for myself. I don't know about you and what you're positioned in, but let everybody know before we close it up.
Yeah, I mean, the only play I made today was on FOMC, right? So looking to buy some lotto calls into the event, thinking that 75 hike was going to happen and that a surprise to the upside would actually be bullish for risk on assets.
Right.
Um, so I mean, that's kind of the only thing that I'm working for the next 15 hours.
Cool.
Um, so
Cool.
yeah,
All right, guys, we're gonna close this up. Again, you can hit us both up on Twitter. Um, yeah, and we'll see you. We'll see you for the next Misfits happy hour.
later.